First on the list is Oracle Financial Services. For the financial year 2022, the company declared a final dividend of 189 rupee per share, with a dividend payout ratio of 86.8%. This payout was on the back of a marginal reduction in employee retention costs. Oracle Financial Services has been a consistent dividend payer. Since 2002, the company has declared 13 dividends. We even covered an in-depth editorial on why Oracle Financial is the greatest dividend stock of all time. The 5-year average dividend payout ratio stands at 75.9%. The dividend yield over the past 5 years has averaged 4.8%. Oracle Financial Services is a subsidiary of Oracle Global, Mauritius. With strong in-house R&D centers, Oracle has produced products used by banks in more than 150 countries around the world. Oracle assists in implementing artificial intelligence, AI, in the company and IT processes. The company has a healthy cash balance of 69 billion rupees as of 31st March 2022, up 3.6% YoY. With its foray into the sovereign cloud regions with EU-based users, the company is looking forward to expanding its clientele base. This is expected to boost the profits, inching the cash balance higher. Second on the list is Cropscience. The company declared a final dividend of 150 rupee per share for the financial year 2022. The dividend payout ratio of the company stands at 104.5%. The 17% rise in net sales was the driving factor for the payouts. Since 2001, the company has paid a total of 25 dividends. The payout ratio over the last 5 years stands at 54.4%, while the dividend yield stands at 1.4%. Cropscience is an Indian subsidiary of Bayer AG, the world's largest pharmaceutical and life sciences company based out in Germany. It provides various products and services through its 3 business divisions: Cropscience, Pharmaceutical Products, and Consumer Healthcare. The company has a healthy cash balance of 7.9 billion rupees as of 31st March 2022, down 34% YoY, due to an increase in manufacturing costs. The company strengthens its manufacturing for the financial year 2023 by setting up a new plant to increase the global production volumes. Third on the list is Bajaj Holdings and Investments. The company has declared a final dividend of 115 rupee per share for the financial year 2022, with the dividend payout ratio coming at 31.6%. The 17% rise in net earnings was the driving factor for the payouts. Since 2001, the company has paid a total of 25 dividends. The payout ratio over the last 5 years stands at 17.5%, while the dividend yield stands at 1.6%. It was due to the increase in the profits. Bajaj Holdings and Investment is a non-banking finance company, NBFC. The company was formed when Bajaj Auto demerged in 2007. The manufacturing business was transferred to Bajaj Auto, BAL, while the wind farm and financial services business was vested with Bajaj Finserv, BFS. The company has a healthy cash balance of 328.9 million rupees as of 31st March 2022, down 39% YoY, due to a decrease in sales and weak markets. The company is planning to reduce the capex for 2023 due to weaker markets and planning to focus on the earnings from dividend and interest income. Fourth on the list is Hindustan Aeronautics. For the financial year 2022, the company declared a final dividend of 50 rupee per share, with a dividend payout ratio of 37%. This payout was due to a 91% jump in the net profit of the firm. Since 2008, the company has declared 15 dividends. The 5-year average dividend payout ratio stands at 75.9%. The dividend yield over the past 5 years has been 3.6%. Hindustan Aeronautics manufactures and maintains aircraft and helicopters for the Indian Air Force, Indian Army, ISRO, Indian Navy, and Indian Coast Guard, among others. As of March 2022 quarter, it had a healthy cash balance of 143 billion rupees, up 99% YoY. To increase sales, HAL signed a $716 million deal with GE Aviation for the supplies of engines. It has also set up a 2.1 billion rupees integrated cryogenic engine manufacturing facility, ICMF, that would cater to the entire rocket engine production under one roof for ISRO. This will eventually result in higher profits for the company. Fifth on the list is Colgate. Colgate declared an interim dividend of 21 rupees and a final dividend of 19 rupee per share. For the financial year 2022, the company paid 40 rupee per share, with a dividend payout of 100.9%. This higher dividend payout was due to a 6% increase in the sales of the company. Since 2001, the company has declared 58 dividends. The 5-year average dividend payout ratio stands at 94.3%. The dividend yield over the past 5 years has been 2.3%. ColgatePalmolive, India, is India's leading provider of scientifically proven oral care products. The range includes toothpaste, tooth powder, toothbrushes, and mouthwashes. The cash balance for the financial year 2022 stands at 3.5 billion rupees, up 37% YoY. For the financial year 2023, company is focusing on increasing the free cash by increasing its sales. Sixth on the list is Balkrishna Industries. Balkrishna Industries, for the financial year 2022, declared two interim dividends of 4 rupee per share, a special dividend of 12 rupee per share and a final dividend of 4 rupee per share each. The company paid a total of 28 rupee per share, with a dividend payout ratio of 37.7%. The company declared a special dividend on the occasion of the Diamond Jubilee year. Since 2002, the company has declared 48 dividends. The 5-year average dividend payout ratio stands at 29.3%. The dividend yield over the past 5 years has been 1.3%. Balkrishna Industries is engaged in the business of manufacturing and selling of off-highway tires, OHT. In the specialist segments such as agricultural, industrial, construction, earthmovers, and port mining. The cash balance for the financial year 2022 stands at 317 million rupees, down 34% YoY. The company has planned a capex investment of 17 billion rupee to ramp up production over 2 to 3 years. It is due to an increase in demand for tires, further boosting sales. Seventh on the list is Supreme Industries. For the financial year 2022, Supreme Industries declared an interim dividend of 6 rupee per share and a final dividend of 18 rupee per share. The company paid a total of 24 rupee per share, with a dividend payout ratio of 39.9%. The high payout was due to a decrease in the finance cost and an increase in sales. Since 2000, the company has declared 39 dividends. The 5-year average dividend payout ratio stands at 38.1%. The dividend yield over the past 5 years has been 1.2%. Supreme Industries is a leader in India's plastic industry. It is engaged in the production of plastic products and operates in various product categories like plastic piping systems, cross-laminated film, and many more. The cash balance for the financial year 2022 stands at 5.3 billion rupees, down 31% YoY. It was due to higher raw material prices. For the financial year 2023, to upscale the production, it has planned a capital expenditure of 7 billion rupees across the various segments, including bath fittings, composite LPG cylinders, and many more. 8 on the list is Cummins India. Cummins declared an interim dividend of 8 rupee per share and a final dividend of 10.5 rupees per share. The company paid a total of 18.5 rupees per share, with a dividend payout ratio of 60.9%. The sales for the company rose by 41%, leading to an increase in dividend payout. Since 2001, the company has declared 44 dividends. The 5-year average dividend payout ratio stands at 69.2%, with a dividend yield of 2.4%. Cummins designs, manufactures, and sells diesel and alternative fuel engines, generators, and related accessories. It also provides after-sales services. The company has a strong domestic presence. Being a part of Cummins USA, it also has a global presence. With robust sales, the company's cash balance saw a growth of 47% YoY to 14.3 billion rupees. Going forward, the company plans to increase its presence in the fishing boat segment to further boost sales. Ninth on the list is CRISIL. For the financial year 2022, the company has declared a final dividend of 15 rupee per share, with the dividend payout standing at 72%. The increase in payout was due to the reduction in sales tax and higher sales. Since 2001, the company has declared 69 dividends. The 5-year average dividend payout ratio stands at 66.5%, with a dividend yield of 1.7%. CRISIL is one of the leading rating agencies in India. It also provides research and risk advisory services. The company's rating services span an entire range of debt instruments for over 8,000 companies. It has a presence across the globe and draws most of its revenue from North America, India, and Europe. Due to the higher demand for research reports due to the prevailing volatile market, the cash balance saw a growth of 5.6% YoY. Going forward, CRISIL plans to leverage its parent company's brand, S&P Global, to expand in the international market to boost sales. Last on the list is Emami. For the financial year 2022, the company has declared a final dividend of 8 rupee per share, with the dividend payout standing at 41.5%. The acquisition of Dermicool and other brands witnessed a 30% growth, boosting the dividend payouts. Since 2000, the company has declared 29 dividends. The 5-year average dividend payout ratio stands at 27.8%, with a dividend yield of 1.5%. Emami is one of India's leading FMCG companies engaged in manufacturing and marketing personal care and healthcare products. Emami is the flagship company of the diversified Emami Group. For the March 2022 quarter, the cash balance of the company stands at 1.2 billion rupees, down by 67% due to acquisition expenses. Going forward, the company is eyeing expansion in the Ayurvedic market to increase its presence. Conclusion: Midcap stocks are often overlooked from a dividend investing perspective. Midcap stocks act faster in the changing market dynamics and can produce better returns. Due to this higher growth potential trait, they generate consistent free cash flows. They also tend to enjoy greater diversification, better access to capital, and more proven management teams compared to small-cap companies. With increasing free cash flows and larger payouts, they are considered a good buffer during times of market volatility. Due to the tussle between the bears and bulls, mid-cap dividend stocks are among the best bargain on the board. However, not all have created wealth equally. If you are investing in dividend stocks, you should investigate the company's history of dividend payments and whether they could continue to make higher payouts.